Good evening. This side Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting, and also a venture capitalist. As we speak, Treasury Consulting is a multinational headquartered group based out India, Singapore, and Hong Kong. More importantly, we do have offices in 3 parts of the globe. Unlike Paytm, Ola, Uber, Swiggy, Zomato, Policy Bazaar, Nikea, Oyo, Delivery, and such great companies, we are not a loss-making company. We are 100% profitable company. I repeat, 100% profitable company. And more importantly, having cash reserves. That is why we openly claim that we are a multi-million valuation company. Because if these who are Paytm, Ola, Uber, Swiggy, Zomato, Policy Bazaar, Card Trade, Nikea, and all, those who humongously dependent on the venture capitalist money and having negative bottom lines, negative retained earnings, we are neither. So we are a multi-million valuation company. We don't need any certificate for that, and we hardly bothers about the feedback. Hardly bothers about the feedback. As an organization, we hold interest in multiple business streams. And one of the business streams is our multinational hedge fund, who takes position in multiple asset classes at multiple geographies. As we speak, we do take positions in Asian equities, Asian indices, European equities, European indices. But having said that, we are completely proprietary in nature. By proprietary, I mean none of the positions which we are taking is backed up by any private equity or venture capitalist firm. None of the positions as we speak. More importantly, unlike American hedge fund, we are proprietary because they are non-proprietary. But there is a similarity, which is we also take position in FICC category. By FICC, I mean fixed income currencies and commodities. We have our own currencies desk. We have our own commodities desk. But like I said, it is proprietary, which means no investor can enter. No one knows our strategies. We never share our strategies in public. Yes, we keep making YouTube videos, letting people aware about the harsh realities, the technical parlance, but we never share our strategies. And no third party is invited to enter. Apart from that, we hold our private news desk where we share financial and non-financial information. Those who are in public, websites, magazines, newspapers, articles, information and knowledge. We have our consulting business. We have our private placement programs. We have our knowledge desk. We have our family office desk, pension fund desk, trade finance desk, and a lot of such business platforms. In case you wish to have any information, you can WhatsApp on my personal number, which is +91 9899 242 978. Alternatively, you can WhatsApp at our back office, which is +91 9818 485 155. Today, I would be covering a very important topic, which I have taken from a very great report provided by Janus Henderson. And here I am covering an economy on whom I have made a lot of research, and thanks to the data provided by the Janus Henderson, which makes our research more and more beautiful. But I have few apprehensions as far as the data collation is concerned. I'm not saying that this report which is provided by Janus Henderson is 100% correct, but still it corrects at most of the places. So the data I have taken from this report. So you can see that this is Janus Henderson report. Today I would be covering the country Japan, whereby the data is from this report, while the analytics is mine. This is Rahul Magan. See you in the part 1, a very interesting numerical analysis, and my favorite friend, my scientific calculator, is right with me. Have a great time ahead. Thank you. Welcome to part 1 of the video, titled Japan and Outlier. I have shot many videos and many videos to come in the later stages. But one thing which is very sure to me, and I have repeated this many times on social media, the debt trap is coming. Rather, let me correct myself a bit, which is that the debt trap is already on the way. Majority of the economies of the globe are having debt to GDP ratio of over 100%. But unfortunately, the credit rating agencies, and we know their attitude effective 2008, the watchdogs, the investor relation forums, the banks, the financial institutions, they are not warning the people. Even I have seen on the Bloomberg, there is hardly any talk about the US debt, which, by the way, already breached $31.5 trillion. I haven't seen anyone talking about the great outlier. So in English, the meaning of outlier means something who is beyond boundaries. So Shane Warne is an outlier in leg spin. Ricky Ponting is an outlier in terms of attitude. He won World Cups, Champions Trophy and whatnot. Einstein was an outlier because of his skill set, and many such outliers. So outlier is of two types. Number one, a positive outlier, like I said about Shane Warne, a great leg spinner. Ricky Ponting, the most successful and person who led the team in a very efficient manner. Einstein, Edison, Newton, the list is endless. They all are positive outliers in their field: cricket, technology, science, physics, chemistry, and all. We have negative outliers also. People who performed badly. I'm not naming anything, so example Wirecard, scandal, EY, full of scandal, KPMG, Deloitte. Every month they get fined, every month. But no one raised the voice. So Japan in terms of debt is a negative outlier. By negative outlier, I means they are moving towards a negative direction, which is not correct. Which, by the way, is not correct. Like I said, I have taken the data from a website, from a report by Janus Henderson, and I'm very much hopeful that the fresh numbers would be available very soon on their website in the public domain. And I would be the first person who would be downloading this, printing it, and reading it. So page number 25 of the report by Janus Henderson talking about Japan. Japan is a global outlier. After years of economic stagnation, its borrowing has soared from 49% of GDP in 1995. So in 1995, Japanese debt to GDP ratio was near about 49% to 250% in 2020. Congratulations. Which means in 25 years, from 1995 to 2020, in 25 years, the debt to GDP ratio grew 5 times. 49% to 200%, 250%, 5 times. The Bank of Japan, having ran out of room years ago to cut interest rate, has been pumping vast amount of cash into the economy to suppress interest rate at all maturities and attempt to reflate the economy, which, by the way, they failed. That is a harsh reality. Now it owns 37% of the government debt by value. So let me invite my favorite friend, my scientific calculator. Today, the Japanese debt is 12.8 trillion. 37%, which means 4.8 trillion. It means as we speak, Japan Central Bank, which is Bank of Japan, holds near about 4.8 trillion worth of debt. Top 5 central banks of the globe, which includes the Federal Reserve, where the balance sheet size is near about 8.5 trillion. European Central Bank, near about 8 trillion. People Bank of China, expanding very fast, near about 6 to 6.5 trillion. Bank of Japan, somewhere 5.5 to 6 trillion. Together, if we add only 4 central banks, hold near about 30 trillion worth of balance sheet. You heard me right, 30 trillion. Now let me study this. It now owns 37% of the Japanese debt by value, which worth more than Federal Reserve holding of US debt. Per person, Japanese debt is 101,644 US dollars. That is scary, very scary. Per person, and this is 2020 figures. Note carefully, this is 2020 figures. Current figures are not available, so we do not know. Since the current figures are not available, we do not know. But as we speak, Japanese government debt is near about 12.8 trillion, precisely closer to 13 trillion, you can say. Precisely closer to 13 trillion. With a debt to GDP ratio of 250% and with a per person debt of 101,644, over $100,000 per person. Do you know that, guys? Do you know that when we speak about Japan, in 1995, the debt per person was 35,876 US dollar, mentioned by this report. 35,876, which has increased to 101,644, near about 2.8 times. Debt is growing. Quantitative easing is growing. Corona is not going. Economic issues are right up. Russia-Ukraine war is increasing the inflation. It is hurting the global GDP. According to the public information, in just 25 days, I repeat, in the 25 days of Russia-Ukraine war, $1 trillion GDP has been evaporated. You heard me right. $1 trillion GDP has been evaporated global. God knows, probably in another 1 month, if this war continues, which looks, we see more substantial damage. I repeat, we see more substantial damage. But the scary thing is coming. If I go to page number 27 of this report, in 1995, the Japanese government debt was 4.5 trillion. In 2000, it went up to 6.1 trillion. In 2005, it went up to 7.1 trillion. In 2010, it shoots up to 11.6 trillion. It came down a bit in 2015, which is 9.7 trillion. While by end of 2020, it is 12.9 trillion. Precisely closer to 13 trillion, you agree. So in 1995, the debt was 4.5 trillion. But by 2020, it is 12.9 trillion. Let me use my great friend. $2.8 times, precisely 2.84. It means the debt level of Japanese economy from 1995 to 2020 is 2.84 times. In terms of relative valuation, I repeat, in terms of relative valuation, it is 49% to 250%, which means 5 times. In terms of absolute valuation, it is 4.5 trillion to 12.8 trillion, which means 2.84 times. Saving the part 2, here more interesting statistics is coming. more interesting statistics. Have a great time ahead. Welcome to part second of the video titled Japanese Economy, a Global Outlier. So, in relative valuation, the debt grew 5 times, which means in 1995, debt to GDP ratio was 49%. Make it 50%. It means if debt was 4533, right, debt to GDP ratio, which means GDP was higher, right, debt to GDP ratio. Today, debt to GDP ratio is 250%, which means the GDP contracted. It's a common sense. GDP contracted. It's a common sense. Okay, so let's compute. 4533 divided by 0.5. So in 1995, the GDP was 9.06 trillion. Okay, 9.06 trillion. Now it is 250%, which means 12858 divided by 2.5. It is 5.14 trillion, which means, think carefully, in relative valuation, the debt to GDP ratio grew by 5 times, 49% to 250%. While in absolute valuation, the debt was 4.5 trillion in 1995. It went to 12.8 trillion in 2020, which means 2.84 times. While GDP contracted by near about, you can say, around 33%. No, not 33%, around, you can say 22%. You can say. So, GDP contracting, debt, GDP contracting, coming down, debt rising in absolute and in relative figures. Average person debt is over $100,000. Common sense suggests it would grow. Common sense suggests. According to a report by Janus Henderson, page number 30, by 2025, 123,582, this would be the debt per person. So near about you can say 4 times, which means in 1995 it was $35,876. In 2020 it was 101,644, and by 2025 it would be 123,582, near about 4 times. This would be the debt. Story is not ending here. Story is starting here. Let me have debt to GDP ratios of few countries computed by Janus Henderson. Australia 55%, Hong Kong 55%, Singapore 155%. 155. I would have separate video on Singapore. Taiwan very well 29%, Argentina 105%, Brazil 95%, Chile 35%, China 22%. I never trust China numbers. Czech Republic 43%, Hungary 76%, India 62%. This is incorrect because International Monetary Fund has said it is 90%. And so on and so forth. The nearest country is the Greece 209%, Spain 120%, Japan 250%. Expected by 2025 is 271%. Now it is up to you. Japan is the largest indebted economy of the globe, followed by United States, followed by China. And the debt levels are rising. They are rising at a considerable pace. They are rising at a considerable pace. As we speak, $1 is near about 122 Japanese yen. $1 is near about 122 Japanese yen, which means for the exporters of US dollar, it's a windfall, because till 1 month ago it was 115, and now the projection is it can go up to 125. But for importers, it's a mess, because they are shelling more what they are making. For Japanese importers, how much profit margin? 10%, 15%, it's all gone. It's all gone. Because today the currency is 122. It was 115 1 month ago. It means 6% depreciation in the currency, which means a windfall gain to exporters while it ends up as a windfall loss to importers. Huge loss, and expected is 125. Around 8.7% if it goes to 125. It means the importers would have a loss of 8.7% if it will go to 125. That's a bloody point. But no one is talking about that. But I am very clear on one thing. I'm absolutely clear on one thing, and to me it hardly bothers whether this Bloomberg, whether this CNN, whether this BBC, whether the New York Times, whether the Wall Street Journal, whether the Standard and Poor, whether this Federal Reserve, whether any big bank is covering this or not. To me it hardly matters, because the statistics which I have by Janus Henderson, and none of the statistics is provided by me. You know that in my videos, whenever I use the data, I provide the source of that data, and I always praise the source. Like in my all videos, I have praised Janus Henderson. Thank you for giving us the statistics, and we are hopeful we'll have the latest statistics soon. The analytics is ours. Now, the common sense is very clear that Japanese economy is heading towards a crash. Rather, I say the soft landing has already started. Now, what the hell is soft landing? The soft landing means that a dollar, which used to be at 109, 110, now it is 122. And expected is 125. Which means one thing is very clear, that very soon the hard landing will also start. And what the hell is hard landing? The balance sheet. The interest rates. Because interest rates are rising. Federal Reserve rose it by 25 bips. Now they are talking about 50 bips. Today South Africa rose, Bank of Korea rose, Bank of England done, and many other central banks are following this. They are very clear that inflation is rising, thanks to Russia for that. And they need to contain that inflation. But these people do not know that containing of inflation via the interest rate hike is immaterial. You are wasting, which is called policy error. We'll speak later on this in detail. So sooner or later, Bank of Japan will also rise that. They cannot run away from this. And the glaring statistics which we have here and the analytics provided by my best friend do suggest that if interest rate rose by even 1%, in Japan in another couple of years, then it means boom. Because the soft landing has already started. And the hard landing will start soon. And then we are gone. I'm sure that no credit rating agency would cover this. No credit rating agency would cover this, but we would cover this because our YouTube channel always cover those videos which no one covers. Because we hardly bother about views, subscriber, comments, counts, all these things. It hardly matters. This is Rahul Magan from Treasury Consulting Group. You know my personal number 9899242978. I repeat 9899242978. Have a great time ahead.